Welcome to another quick hit review video. It is Sunday the 21st of July and we're going to look at a few trades I've got on the radar for the week ahead, and Monday, Tuesday for a couple of these trades. So I've got half a dozen of them. First of all, just looking at the news events, there's no news out on Monday, so that would not stop me from taking any trades on the open if there are any. First trade I want to look at is the Aussie dollar. If you were within the live room last week or even the chat system, you would have noted that we spoke about this move. We had a move higher, physically violating the previous outside return. Then we saw a pullback. Then we saw a new high, officially putting us in trend. And higher time frame here on the dailies, we do have a back pattern. And we can draw this out by X2A, A2B, B to C, and a CD completion up at the 886. However, personally, I am now looking at price coming up to test the wicks up in this zone. So what we can do is drop down the time frames and have a look for an entry reason. And it just so happens that this move right here gives us a nice pullback and a move higher, making this a lovely area to get involved with a long opportunity. Now there's a few things that could set up here. I actually like the way price is moving. So we can use the standard second chance entry, first chance entry, which is where we come into this zone just here, which is the wicks, and we can look for a rotation pattern. Number two, we come into the candle bodies. We look for simply a higher high, higher close. Number three, we look for a rotation pattern in the wicks down at the bottom. So three potential options there. If we just zoom out a little bit and look for structure, well, I actually like the look of this just here. We have this double test, and it does appear just above that 7,000 number, which means that we could get an entry right down here, which would be lovely because that would mean a small amount of risk. And we can throw some fibs on as well from our swing low to our swing high, and we have the 382 coming around that structure level. So we've got a few things setting up there. If we drop to the 60-minute, we have had first of all a retest up here. So that would be classed as a rotation. So on the 60-minute, because we've got a rotation pattern, I can't look for a higher high, higher close candle. So this will have to be a trade that I only get involved with on the 240 time frame. Because they're my rules. If there's excuse me, if there's a rotation pattern, sorry about that, if there's a rotation pattern on that time frame, I can't take a trend continuation trade. So looking for a higher high, higher close here on the 240, ideally for a second chance entry. Let's go and take a look at the euro yen. This was the big flag pattern we've been speaking about that has been breaking out but has not given us the opportunity to get involved. So we have the swing in the market, we have the directional move, and as per the educational material, this is a valid flag pattern because we are coiling or wedging, and I do run through the rules for this in the educational material, and we would be looking for targets down at that 127. Now this is a very big pattern, and of course it's happened on the dailies. My maximum risk is only 100 pips, so this isn't a trade I can take. However, because this is a breakout pattern, I can be aggressive with the entry because these are called breakout patterns for a reason, and we typically break out with force. So I'm allowed to drop down the time frames and look at getting involved in the move down to that 127 extension. And we've been moving quite nicely here on the 240. In fact, you might be able to see this better on the 60. Well, 60 is a bit ugly. We'll go back to the 240. Okay, so we had this move lower, pull back, move lower, pull back, move lower, pull back, move lower, pull back, move lower. This was the pullback. It came into the first chance entry and actually provided a 3-bar reversal. And as a result of that, we are now back down within the lows. So there's no opportunity for me right now. However, what's going to happen here, if I put a structure level on at this very low here, which is at the end of the pole for this flag pattern, if we violate that level of structure, and it will also mean that we end up violating this level of structure here again, this will make for a very nice opportunity to get involved, because we'll have a move lower and then we'll actually look for a pullback to the outside return and look at getting involved with the trade. And I'm just going to go back to the 240, and we'll maybe looking for two targets here, maybe looking for a retest just here, and secondary targets down at that 127 extension. And so there is still around 150 pips up for grabs on that currency pair. Let's go and take a look at the Euro Aussie. Euro Aussie is still breaking to the downside. We've caught a couple of nice winners on this in the last couple of weeks. Still looking at this head and shoulders, you can see the drawings here, so I'll just draw this out again for anybody that wasn't involved in the live rooms. Move higher, pull back, move higher, move lower. We physically broke below this level of structure, pull back, and we're looking at the market. I'm actually looking at the market coming all the way down to this level. So let's drop down to the 240. There is a little bit of a concern at the moment, and that is that we are at the 15900 psychological number. But taking a closer look at this on the 240, a move lower, a pullback, a move lower, a lovely pullback, and another move lower. So if we get a pullback into this area, this will be a great shorting opportunity into this zone. And if we just zoom out, we can look for a couple of things actually. You know that we can play for an AB equals CD pattern of the head and shoulders as a minimum. So we can look at taking targets down here, or our full position, which just so happens to come into this very nice level of structure just here. You can see we've had multiple tests of it. Or we can actually hold the other half of our position for a complete retest of the lows. Yeah, probably my whole position off at this level, actually looking at it, maybe 160 pips up for grabs on that Euro Aussie. So that's looking nice if we do get the pullback. We have the Pound Aussie. We have that big daily AB equals CD pattern still, and that double bottom. So just to draw this out, it is looking like this. Duplicate it, move it down. That AB equals CD pattern comes down into the wicks, and we know the wicks is where we tend to see those rotation patterns, double bottoms, head and shoulders. And what we do is drop down one time frame and we look for a valid double bottom. Now, first of all, I'm just going to put a structure level in just there at the closes of the candles, and you can see we actually held that structure level, and we do actually have a retest here. And last week this was valid for me, but there was 150 pips of risk. You can see we've got the RSI confirmation here. We went oversold with divergence, but the way price is reacting now is not the way that I would expect to see a double bottom. So what I'm going to be waiting for is the market to come back down for another retest and hold this structure level, maybe even put in a higher high, higher close, and look for an entry reason on the lower time frames. With this AB equals CD pattern, we do have a nice fib level, the 1618, right down in that zone as well. And we can look at playing then for this very big target of a 400 pips, I think it was. Just let me throw the fib on. But this is a very large trade, and because it's not producing the double bottom in the form that I can recognize as being a valid double bottom, I'm going to wait for more confirmation. But there is still over 400 pips of reward. Let's just drop down to the 60 on this one. This is looking like on this time frame more like consolidation. So we're just simply going to wait and see what happens with this. Let's move on to the pound yen. Pound yen is interesting. This is the second to last trade, by the way. We could be looking at the move lower now. So this is our structure level at the closes of the candles just here. And you can see that we had a directional move lower. And then the market has been trending lower, but not very nicely. You know, trends we like to see long extensions, small pullbacks, long extensions. And we're not really doing that. We seem to be finding resistance, but we are moving lower, and we may have just found an area now where we could be coming significantly lower. So just to draw this out, remember our very big flag pattern that we had, it was an indication that we're in a strong directional trend. We had the breakout, we had another flag pattern just here. Yep, another flag pattern just there. We broke out, we saw the pullback and another break to the downside. And what I really do like about this is this area right here. I'm just going to go ahead and highlight the wicks. So let me just draw this last area out again. So we had a move lower. This physically made a new low, a pullback, and then we've made a new low. Okay, so this theoretically now is the entire outside return just here. However, we can look for a rotation pattern within the wicks. Now what concerned me is that if we put a structure level on just here, then this was actually a new low. And what it meant was that we'd actually violated that level of structure. So the only area that I would have looked for a short was this zone. So this is one of those situations now where technically we've violated trend because we've broken to the upside. However, we only just did it and we've now come back up into what for me is very likely the better outside return than this. And we can then drop. Well, before we do drop, look at the lovely 3-bar reversal we've got here. And then we can drop down the time frames to the 60. And look at what we're doing. We've had a move higher, a pullback, and now we've double topped up here. So we can be more aggressive at shorting the market here because we've got this double top. The only problem is it is not confirmed, and those of you that have gone through the educational material, it is only a confirmed double top when we violate the V point. And as you can see, we physically have not closing below it. But look at what we're doing here as well. We are moving sideways, a sign of consolidation before we see a breakout. And that's what I'm really loving about this. So since higher time frame, we're looking short, we've got the double top, but we don't have the confirmation that it's a double top. Everything is indicating we are going to break to the downside. And what I'm really liking about this is this. This is one of those situations where I would be interested in a low and tight flag. So test, look what we've got here, a double test, another test down here and coming up to here. Now there's an awful lot we can look at here. So we've got a low and tight flag first of all. We've got a double top that's formed. You can aggressively sell this for a 26.18 trade, although I'm personally not. And let's drop down to the 5 minute. You also have this AB equals CD pattern that's set up right here. So there's an awful lot setting up to indicate that we could see a reversal here. So as we see the market open this evening, this is going to be one of those situations where I'm going to look at getting involved with this low and tight flag and also the head and shoulders, because this is the left shoulder, the double head. This would be the right shoulder. We have a potential breakout pattern to the downside, and first targets are going to be right down here. There's going to be 76 pips up for grabs. Let's take a look at the 240 and secondary targets then. Well, for me personally, we could be looking at the closes of, right here. Going to be looking at that 13300 psychological number. So this will be 2 targets, and this will be a lovely trade if we can get involved and get these targets. We'll be looking at about 80 pips for target 1s, and target 2s we'll be looking around 172 pips, and we may get the entry on the open if we see a bit of a gap. The final currency pair I want to look at is the New Zealand dollar. Let me do that again. New Zealand dollar dailies. And I haven't wrote down what we had here, but this was a trend continuation trade. Okay, so what we've got here is the market went higher. We've physically violated this major level of structure. We saw a pullback and we've had a move higher again. So a 3-point move here. We would be looking for a pullback to the outside return. So simple trend continuation trade, and we'll be looking for our 3 areas. The first chance, the second chance, which is the candle bodies, and the last chance, which are the wicks down there. And as we drop down the time frames to the 240, we can see actually coming into this first chance area, we've got this very nice swing in the market and a fairly directional move, and we could be seeing a flag pattern set up here coming right down into this lovely structure area and this double top here as well. Just take a look at the 60. Okay, so not too much there on the 60. That's all I've got for now, guys. If you are registered and you're part of the free Forex Education platform, so I will see you in the chat on Monday morning, or if you're registered for the signals, if we do get the entry on that pound yen, I'll be sending the signal out just shortly after the open.